Hey everyone, welcome back to the AI Tech channel. Today, we're diving into a hot topic that's been shaking up the AI investment world, the SoundHound AI and Nvidia situation. Did the market overreact to Nvidia's recent move? That's the million-dollar question, and we're going to unpack it all for you. Let's get started. Okay, so here's the deal. Nvidia, the AI chip giant, recently reduced its holdings in ARM Holdings and completely exited its investments in two AI-focused companies, Serve Robotics and, you guessed it, SoundHound AI. This news sent shockwaves through the market, causing SoundHound stock to plummet by over 27% in a single day. Ouch! Serve Robotics also took a massive hit, dropping by over 40%. Investors were clearly spooked. But was this a knee-jerk reaction? Was the market selling off something that still has a ton of potential? We're going to dig deeper and find out. Now, let's talk about SoundHound AI. This company is known for its advanced voice AI solutions. Think about voice assistants, speech recognition, and natural language processing. They're powering voice interfaces in cars, restaurants, and all sorts of other applications. They've been on a roll this year, with their stock surging by a massive 178% year-to-date before this recent dip. That's huge growth. So why the panic? Why did Nvidia pull out? And more importantly, does this mean SoundHound's growth story is over? Well, SoundHound CEO, Kevin Mohajer, believes the market is overreacting. He sees this sell-off as a temporary setback and remains confident in the company's long-term prospects. He might be right. Consider this. The demand for AI-powered voice technology is only going to increase in the coming years. As more and more devices become voice-enabled, companies like SoundHound are poised to benefit. Think about the Internet of Things, smart homes, and the automotive industry. Voice is becoming the new interface, and SoundHound is a key player in this space. So, could this dip actually be a buying opportunity? Many retail investors seem to think so. On platforms like StockTwits, the sentiment remains largely bullish, with traders viewing this as a chance to grab shares at a discount. Let's analyze Nvidia's move. Why did they reduce their stake in ARM and completely exit SoundHound and Serve Robotics? One possible explanation is that Nvidia is simply reallocating its capital. They might be focusing on their core AI and GPU advancements, which are essential for powering the entire AI revolution. Nvidia's GPUs are the backbone of AI development, and they need to invest heavily in research and development to stay ahead of the competition. By trimming their investments in smaller AI companies, they can free up capital to focus on their core business. This doesn't necessarily mean that Nvidia doesn't believe in SoundHound or Serve Robotics. It just means that their priorities have shifted. This situation highlights a broader trend in the AI investment landscape. We're seeing a lot of volatility and uncertainty as investors try to figure out which AI companies will be the long-term winners. There's a huge amount of hype around AI right now, and some companies are definitely overvalued. It's important to do your research and understand the underlying fundamentals before investing in any AI stock. Don't just jump on the bandwagon because everyone else is doing it. Look for companies with strong technology, a clear business model, and a solid management team. SoundHound AI definitely ticks some of those boxes, but it's also facing increased competition from other AI voice technology providers. Let's talk about that. The voice AI space is getting crowded. We've got giants like Amazon with Alexa, Google with Google Assistant, and Apple with Siri. These companies have massive resources and are constantly improving their voice technology. SoundHound needs to differentiate itself to stay competitive. One way they can do this is by focusing on specific niches, like the automotive industry or the restaurant industry. They can also partner with other companies to integrate their voice technology into existing products and services. For example, they've partnered with Hyundai to bring voice control to their cars. These kinds of partnerships are crucial for SoundHound's long-term success. They need to prove that their voice AI is better than the competition, and they need to find ways to get their technology into the hands of as many users as possible. This involves advanced technologies like automatic speech recognition, ASR, crucial for converting spoken language into text, and natural language understanding, NLU, which enables the system to understand the meaning and intent behind the user's words. Furthermore, their proprietary speech-to-meaning, STM, technology allows for faster and more accurate voice processing. SoundHound needs to continually innovate in these areas. Here's where things get really interesting. Despite the huge sell-off, retail investors are largely optimistic about SoundHound's future. This is a crucial point. Why are these investors so confident? Well, many of them believe that the long-term potential of voice AI is undeniable. They see SoundHound as a leader in this space, and they're willing to ride out the short-term volatility. They also might be influenced by the dip mentality, which encourages investors to purchase stocks when they experience a temporary decline. This strategy can be risky, but it can also be rewarding if the stock rebounds. It's important to remember that retail investor sentiment can be a powerful force in the market. If enough people believe in a company, they can drive the stock price higher, even in the face of negative news. This is something to keep in mind when evaluating SoundHound's future prospects. Let's quickly touch on Serve Robotics, the other company that Nvidia completely exited. Serve Robotics specializes in autonomous, low-emission delivery robots. Think about food delivery, package delivery, and other last-mile logistics applications. The company's stock also took a massive hit, dropping by over 40%. However, similar to SoundHound, retail investors remain highly optimistic about Serve Robotics' long-term potential. They see the company as a leader in the robotics and automation industry, and they believe that autonomous delivery robots will play a major role in the future of logistics. The fact that retail investors are still bullish on both SoundHound and Serve Robotics suggests that there's still a lot of faith in the long-term potential of these companies, despite Nvidia's decision to pull out. So, let's recap the bullish argument for SoundHound. The demand for voice AI is growing rapidly. SoundHound has strong technology and a clear business model. Retail investors are largely optimistic about the company's future, and the recent sell-off could be a buying opportunity. However, there are also some risks to consider. The voice AI space is competitive. SoundHound needs to differentiate itself to stay ahead of the competition, and Nvidia's decision to pull out is a cause for concern. Ultimately, the decision of whether or not to invest in SoundHound is a personal one. You need to do your research, weigh the risks and rewards, and decide if you're comfortable with the level of uncertainty. Let's consider a counter-argument. Now, let's consider the bearish argument against SoundHound. Nvidia's exit is a red flag. It suggests that Nvidia may not believe in SoundHound's long-term potential. The voice AI space is highly competitive, and SoundHound faces stiff competition from tech giants like Amazon and Google. The company's stock has been volatile in the past, and there's no guarantee that it will rebound from this recent sell-off. Furthermore, the company's financial performance has been mixed. While revenue has been growing, the company is still losing money. Investors need to consider these factors before investing in SoundHound. There's a real risk that the company could struggle to compete in the long run, and the stock price could continue to decline. It's important to be aware of these potential downsides before making any investment decisions. One particularly relevant academic paper to consider is Deep Learning for Conversational AI, a review by Deng and Yu, 2018, which highlights the technical challenges and competitive landscape in the field of conversational AI. This paper underscores the need for SoundHound to continuously innovate to maintain a competitive edge. Okay, so what's the future outlook for SoundHound? Well, it's hard to say for sure. The company's success will depend on its ability to innovate, differentiate itself from the competition, and secure new partnerships. If SoundHound can execute on these fronts, it has the potential to become a major player in the voice AI space. However, if it struggles to compete, it could face significant challenges. The key is to watch the company's progress closely and see how it responds to the challenges ahead. Keep an eye on their partnerships, their product development, and their financial performance. These are all important indicators of the company's long-term potential. Also, follow key opinion leaders in the AI space to get their perspectives on SoundHound's technology and market position. By staying informed, you can make a more informed decision about whether or not to invest in this company. So, what's the actionable advice for investors? First, do your research. Don't just rely on the opinions of others. Read the company's financial statements, analyze its technology, and understand its competitive landscape. Second, be prepared for volatility. AI stocks are often subject to wild swings in price. If you're not comfortable with this level of risk, you might want to consider investing in a more diversified portfolio. Third, consider your long-term investment goals. Are you looking for a quick profit, or are you willing to hold onto the stock for the long haul? SoundHound's long-term potential is uncertain, so you need to be prepared to wait and see how things play out. Fourth, don't put all your eggs in one basket. Diversify your investments across different sectors and different companies. This will help to reduce your overall risk. Finally, remember that investing in the stock market is always risky. There's no guarantee that you'll make money. So, only invest what you can afford to lose. It's crucial to apply principles from modern portfolio theory, MPT, to mitigate risk and maximize returns. MPT emphasizes diversification and asset allocation based on individual risk tolerance. All right, that's it for today's deep dive into the SoundHound AI and Nvidia situation. Was the market overreaction justified? Maybe, maybe not. It's a complex situation with a lot of moving parts. But one thing is clear. The AI revolution is just getting started, and there's a huge amount of potential for growth in this space. Whether SoundHound will be a long-term winner remains to be seen. But one thing is certain: the AI market is rapidly changing. We've seen how rapidly markets can react, sometimes with a herd mentality that ignores underlying value. Remember, informed decisions are the best decisions. What are your thoughts on SoundHound and Nvidia? Do you think the market overreacted? Let us know in the comments below. And don't forget to like and subscribe for more AI tech news and analysis. Thanks for watching, and we'll see you in the next video.